the CNBC-TV18 Motilal Oswal studio.
Overall, we're seeing green coming in across the screen for Asia Pacific, especially look at the Nikkei. That opened up first and that was up almost 5%.
China is essentially a closed country. In fact, it is a closed country.
Dollar index 103.43. Oil prices continue their slump.
Now all eyes on whether or not it can get past the 20-day MA. MCX is a stock that I'll track today.
India, out of all the major economies around the world, is probably going to be least affected.
22,481, 1.5% higher. The Nifty Bank is up on 1.3%.
FY25 is ending absolutely flattish on EPS terms.
Pharma is our largest exposure out there. We got one aviation business which is expanding rapidly.
This is a global slowdown. This is going to cause a global capex slowdown.
11 o'clock, markets are still going strong, up 200 points on the Nifty, 650 points on the sensex.
I would say we are very well positioned because India's ability to negotiate is much greater.
I've seen a slightly steady fall in the currency over the last 2 days.
Almost on the verge of recovering everything that we lost in yesterday's trading session.
$500 points on the Nifty. Well, that was a day so far, and as we start this edition, I think we are closer to the highs of the day, and is looking pretty good. Can we call it turnaround Tuesday? Will that phrase hold till 3:30? That's the question, because we are still very sensitive to headlines as they will be coming for sure. Maybe not in the next 1 hour, but very, very sensitive in that sense. This is Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant with my colleague Surabhi and Nigel. Guys, hi, afternoon.
Hi, afternoon, Prashant. Afternoon, Nigel. I'd want to believe what you're saying is right, Prashant, that the worst of the price capitulation, the absolute mayhem, is over. But that may not mean a straight run, a pole vault, a V-shaped recovery from here. But as long as we can at least stop the mad falling, I mean, it's been good from that standpoint today.
Provided we know all the negatives, which is not the case. We don't know what we're going to hear later today, right? So at least as of now, it's encouraging to see a bit of a bounce, and it's very encouraging to see the price action actually on the Indian markets, because all across the weekend, people kept telling you haven't seen 2008, you don't know what happens at that point of time. People are rooming the circuit limits. We had a couple of Asian markets yesterday that were halted for trade. Yeah. And we got away with a cut, right? With a cut of less than 2%. And we ended at the high point of the day. And today's price action as well is very, very encouraging. If someone told me that this is going to be the screen, it's pretty good. Maybe at high levels, we'll see some kind of supply. But a good bounce and a resilient market is what I'd like to call it.
Absolutely. So let's just quickly recap the levels here. We've essentially what we've done is we've retraced nicely to hourly averages. So, for example, and I don't know if you have the numbers which should come up on your screen. The high today is 22,697, unless we've made a new high. No, we've not. So the high today is 22,697, and 22. Basically, we've almost hit the 20 hourly average. The number that we put out in the morning, 22,711 was that number. So just 10 points short of it. At the day's high. So, now, of course, beyond this, we'll have to see. The next resistance is essentially the 50% retracement of the fall that we've seen for the Nifty, which is now 22,806. Again, very near-term levels. No point putting out sort of big numbers, but this is the next one for the Nifty. Bank Nifty high today is 5793. And here we've, again, almost hit the 61.8% retracement of the fall, which is 5848. Just 50 points short. There's nothing on the 51,000 nearly index. Small cap index, mid cap index, both are up 2% apiece. So, it's good going, and it's some recovery and repair which we are seeing. Although, as I've said, this is very sensitive. It remains vulnerable to what may come, and what we've heard overnight from Trump and officials once again seems to be clear that they're not looking for any easy wins, quick wins. They are in this, they're digging their heels in. So this is not going to get done easily. Even if, countries offer to lower tariffs, what they're looking for is bigger than just tariffs. They're looking at the cumulative deficit, which includes tariffs and non-tariffs. And non-tariffs are more structural, more ingrained, and they're harder to undo in that sense. So we will be with this news flow for a while. And the only question is whether, negative news can only impact and keep hitting you with the same intensity at a certain point. Whether this is that or this is just a little bit of clean positioning, allowing us to breathe a little bit. We'll find out over the next couple of days. Guys.
Yeah, well, for what it's worth, it's been a much needed breath today across global markets, really. Most of the Asian screens have had a positive close. Japan managed to go home with all of those 6% gains today, so it's been looking good. Europe also is tracking gains between 1 to 2% as we speak. Now, for us here, financials, some PSUs, it's actually an across-the-board up move that we're seeing, but within that, financials are doing really well. On the large cap screen, obviously, the bank nifty is taking things higher, 1.5%, 1.4% higher. But like I'm saying, not just banks, NBFCs are having a very good run today. Look at Jio Finance on the large cap screen, 5% up, is actually making Jio Finance the best performing nifty stock as we speak. But it's not alone. Immediate next one, Shriram. Shriram Finance is up about 4%. You move to the broader space in the market. Look at Chola Finance, 9.5% higher. 5-Star Business Finance. So it seems that NBFCs are very, very excited. Now, is there something more coming in the RBI policy tomorrow? The wide expectation is that there should be a 25 basis points rate cut for sure. And there should be an official change in the stance to back to accommodative perhaps as the RBI addresses the liquidity concerns. Today also there was a 20,000 crore rupee OMO in the market. That's a 80,000 crore rupee liquidity bazooka in April that the RBI is discharging. Today was the second tranche and there are 2 more to go. So all that is making financials a very, very exciting spot in the market, so to speak, this afternoon. Beyond that, some other names that are seeing repair and recovery. PG Electroplast would be an example, 6-7% higher. You're saying, newer names or the more recent listings, for instance, Blue Jet Healthcare, also up and about. Acum Drugs, 7.5% higher. So these are some of the other names. Beyond that, PSUs, like I said, PSUs are also seeing a fair amount of traction. Hoodco is up about 6% as we're speaking. Gale is up and about. BEL, obviously, from the large cap space, doing really well after its order announcement. So it's a well-rounded up move, recovery, where I think right now 48 of the 50 stocks of the Nifty are participating. No, actually make that 50 on 50 now. If we pull up the heat map, it'll look very nice. Full 50 shade of green on the Nifty this afternoon.
Well, that's right. And talking about those 50 stocks, I think Reliance Industries has found its form. Yeah. And that's a large weight on the index. I think 1250 is a crucial resistance mark where it's 20 DMAs there. I think the 100 DMA as well as there. And Reliance Industries finding its form is very, very important from a market perspective, purely because of the large weight it has on the index. But let's tell you how the trade is setting up today. You have advanced decline ratio that should come off you. Most encouraging, 10 stocks advancing, 1 stock that's declining. Yesterday as well, as we mentioned earlier today, there were more than 300 stocks that recovered more than 10% from the low point of the day. So the breadth of the market, actually, the price action is encouraging out there. The PCR made that point yesterday, made that point today as well. The PCR, when it moves to around 0.65, 0.7 odd, normally we see a bit of a bounce, and that's played to script because as we speak, the PCR has moved to around 0.85. How is that? There's some put writing that's creeping back in there. And tomorrow's the expiry, remember, because we have Thursday, that's a holiday. So tomorrow is when that expiry will play out there. And the premiums have absolutely got smashed. The 22,500 put, aggressive writing is what we're seeing out there. 22,400 put as well. On both those two, the premiums are down between 70 to around 75%. So the bulls believe that maybe they can defend the lower levels just in the near term. These contracts expire today. And take a look at the 22,000 call. Those writers, they have packed their bags. They are in trouble because today the ferocity of the kind of up move that we've seen, there's big unwinding out there, close to 28 lakh shares getting shed at that particular strike. Finally, what are the levels I'm looking at? I think this is more or less still a pullback because we need to get around 22,950 to see a larger resumption of the uptrend. So that's the important mark, 20 and 50 DMA at around 22,950. And on the Nifty Bank, the 100 as well as the 200 DMA, that's very, very important in terms of a reference point. As of now, we're closer to around the 100 DMA. If we can get towards the 51,000 odd mark, that's what will give further confidence. So 22,950 on the Nifty Bank, around 51,000 or thereabouts. Till then, you'll be treating this as a bit of a pullback. That said, how do you trade the final hour? Mitesh Thakkar joins us on the show. Hi, Mitesh. A better day for the bulls, not out of the woods, but we'll do with some green, right? What are the levels you're looking at? And if someone had the guts to go ahead yesterday and take a long position, what would you advise? Enjoy the evening or stay tuned for President Trump and, hope that there's no negative news flow?
That's exactly what I would wish for, Nigel. Good afternoon. I think, one, the bounce back is good, and, while we did taper off during the day, you again come back, and that's a good thing. But my only worry is that, the first thing is that 22,850 was the low of Friday. So 22,800, 850 is the zone which I have been highlighting as the key level, though 22,600 had some pivot which has been captured to strike their action. So till we fill the gap, I think there will be some worry about the recovery process, but that's the level to watch on the upside. And till then, what we've suggested is to trade with some kind of put spreads on the Nifty. And the other thing is that you can look at trading individual stocks that amount. So I think that's the way we're approaching it. Right now, I think I have a buy on AB or Aditya Birla Capital, AB Capital. That's a stock which is recovered well, it's filled the gap. So buy here with the stock at about 180 for targets of 195 to begin with. If the markets are good, the stock can eventually even go higher from there. And the other one is a buy on HDFC Life with the stop at about 680 for targets of 710.
Okay. All right. Got that. Mitesh, actually, if you can just stay on, we want to discuss this move in OMCs with you in just a second. But first, we'll get the fundamental views around it very, very clear. Right now, oil marketing companies are seeing a nice surge, about 5% up on BPCL and HPCL. IOC is not too far behind. IOC is up about 2 to 2.5%. So much happened since last evening. There was an excise hike. There was a hike in the price of LPG cylinders by 50 rupees. And then there is a whole question of under-recoveries, because we know that in FY25, the previous financial year, these companies, oil marketers, they have suffered huge losses in the LPG sales that they have undertaken. So where does all of this stand? And can the companies hope for any sort of additional help or recovery from the government? Let's go across to Sudarshan for the latest on the math. Sud?
So yesterday we saw government, basically oil minister making two major announcements, and reason of both these announcements to pay the LPG compensation for FY25 and the ongoing losses that these companies are making on LPG. So first announcement that government made that it's going to increase the special additional excise duty on petrol and diesel by ₹2 per litre, and second that LPG is going to be increased by ₹50 per cylinder. Now coming to first excise duty hike, why it was hiked. So in FY25, total LPG under recovery was ₹41,338 crore. Now this ₹2 hike will give OMCs, or say government, around ₹30,000 to 32,000 crore. Now government is saying that this amount is going to be used to make the payment for FY25 under recovery. But there is one catch over here. Unlike previous LPG compensation, this time it's being done by excise duty hike, so the amount will go into exchequer account, not in the special fund. So oil ministry will have to go back to finance ministry making request for this payment. But ideally 30,000 to 32,000 crore will come. Also sources suggest that government will soon move to cabinet seeking the approval of this payment. The second announcement about the LPG price hike of rupees. Why was this done? This was done to make the payment for ongoing dues. So currently all these OMCs make losses of in the range of ₹220 to ₹250 per cylinder. Now this 50 rupees hike will bring their losses down to ₹200 per cylinder, and oil minister has confirmed that this will help in reducing the losses. Now the question is, will the increase in excise duty hike impact our fuel price at the pump? The answer is no. It will be borne by oil marketing companies. What do brokerages feel? Brokerages feel that these are the positive announcements, but one concern will remain is the fuel price cut that these OMCs might take. Also, oil ministry did comment that if crude remains in the range of $60 to 65, or even if it moves higher to $68 per barrel, oil companies will have the headroom to cut fuel price. So we'll have to check going forward if there is a headroom and these OMCs take price cut or not.
Yeah, absolutely. As customers, we're definitely waiting by for that. But Sudarshan, before we let you go, have to talk about this latest piece of news that's coming in from PTI. Let's pull up gas stocks, city gas distribution companies in a market that's wide green, recovering. City gas distribution stocks like IGL, which have a huge presence in Delhi NCR, they are under pressure. And why is that? You just saw the flashes on the screen pointing out that it seems like there is a move to phase out CNG three-wheelers in Delhi NCR and perhaps go all electric. So Darshan, have you seen this? What's the latest?
So earlier electric vehicle policy of Delhi government was about to expire on March 31st. So now this policy has been extended by another 15 days that Delhi government has announced. Also, as per PTI, we understand that Delhi government has released the draft of new EV policy that they are calling it EV policy 2.0, and under that policy they have announced certain recommendations, but please do understand that this is the draft. Before it gets released or notified, it has to go to government, cabinet and even the assembly. Once those approvals come, then only that will be implemented. One stock that will be impacted negatively because of these recommendations is IGL, because it's Delhi based, and total volumes, IGL 30% of total volumes come from these CNG, but majorly it comes from the cars. Now, what are those recommendations? I'll read out certain recommendations. First, government has recommended phasing out of CNG-driven auto rickshaws, and it says, the draft says, no CNG auto rickshaw registration will be allowed from August 15 of this year, that is 2025. And also, CNG auto permits will not be renewed from August 15. All the CNG auto permits will be substituted or reissued with only e-auto permits. Policy also recommends phasing out fossil fuel-driven vehicles carrying solid waste deployed in large numbers, and these vehicles are mainly of municipal corporation. For two-wheelers, it says, two-wheelers running on petrol, diesel and CNG will not be allowed from August 15 of next year, that is 2026. It says no diesel, petrol, CNG, three-wheeler registration in case of goods carriers from August of this year. Also, all garbage collection vehicles of this municipal corporation have to be transitioned to electric vehicles in a phased manner and have to achieve 100% electric fleet by December 31 of 2027. As far as the public transport buses are concerned, operated by Delhi Transport Corporation, it says they have to convert into e-buses in a phased manner, and private car owners will have to buy electric cars only if they already have two vehicles. So overall, recommendations are not looking good for as far as IGL is concerned, because automatically all these vehicles running on CNG in a phased manner will have to convert into electric.
Okay, all right, Sudarshan got that. Thanks very much. So, two important stories playing out. This one is a little more recent. The fact that Delhi could be moving towards a full EV fleet when it comes to three-wheelers. Well, let's discuss this with our next guest on the show, someone who actually hails from the national capital. Gurmeet Chadha is with us, managing partner and CIO at Complete Circle. Gurmeet, great to have you on. Let's start right there. I don't know if Delhi is fully ready, charged up for a full EV fleet or not, I mean for three-wheelers. But anyway, IGL is falling quite a bit. What would your take be on the stock?
No, so, we've held this will be for long that, city gas distribution and OMCs both, are subject to frequent pricing changes by state and central governments. And as a result, market is unable to, really discount the way it traditionally does in terms of what earnings you want to discount. So now this new EV policy puts a bit of a thrust on phasing out of CNG autos and old commercial vehicles. So I think it's an avoidable space to be in, not in our portfolios. And this is not the time to, really try and second guess in terms of what's going to happen, what's not going to happen. Just stay put in terms of where you have reasonable idea and some earning visibility as far as portfolio positioning is concerned.
We anyway have to second guess far bigger things as well, right? We have to second guess what the US president is thinking on a daily or hourly basis. So that as well. But there you go. So Gurmeet is saying no to OMCs, no to city gas distribution.
What about exchanges, Gurmeet? The two exchanges that are doing well today, one is MCX, because there's been so much of volatility in the commodity prices and the volumes have gone through the roof. If I'm not mistaken, yesterday and day before, the volumes were up, I think 50% higher than what we saw the average, say, of March. So massive volumes is what we saw in MCX, and that's where that stock is up. And BSE, it's a smaller player in the options market, but that's gradually gaining market share. And today is the expiry as well. Last week as well, I understand that their market share was in excess of 35%, just purely for this Tuesday. Y'all also, have NSE, I think so. So between the exchanges, what do you all like? NSE is the unlisted one, the safe one. Hopefully it lists at some point of time. But otherwise, these two, they are bucking the trend.
Absolutely, Nigel. But it's just that the valuations are not comforting. It did fell before below 4,000, especially BSE from almost 6,000 odd levels. But still, even if you see depositories like CDSL or CAMPS, they also continue to trade almost 35, 40 times. Good asset management companies like HDFC, Nippon, they are also at about 30 times plus. So while the structural story is there, despite the correction, valuations remain rich. So we are holding on to what we have. So we have CDSL, we have CAMPS, we have a couple of asset managers in the portfolio. We may look at a broking firm post earnings. I think that's when you'll get a better impact in terms of how much has been the impact on transaction revenues. And NSE now post the ISIN getting unfreezed is now freely available at even 100, 200 shares in terms of lots. So price is currently around 1,600, 1,550 to 1,600. If you take the pre-bonus rate, that's about 7,500 to 8,000. That's about 25, 30 times. That I think is still more reasonable amongst the lot. And obviously there are conditions in terms of IPO coming this year. So I think capital market play is structural. But for now, I think you have got to be positioned where valuations are more reasonable, like banks, like a couple of good NBFCs, some gold-based NBFCs, where you can take advantage. And if you see the OIS rates now, 1 year and 5 year, they're actually indicating RBI may do a little more than 25 bips, either a CRR cut or a bigger reduction or more liquidity infusion. So I think that's a better pocket to be in, Nigel.
Okay, all right. By the way, this quarter number will show the pain, at least in some of these exchange businesses. Both NSE, of course, results are closely tracked, even though it's not listed yet. Of course, BSE as well. Gurmeet, coming back to you, let's talk about the currency markets as well. And a quick word on, of course, what's happening with the rupee. Under pressure, second day running. There is, of course, the the yuan fix by China as well, which is indicative of the fact that they're ready to push the yuan lower. Lata is here with some perspective. Lata, what are you picking up?
Well, there was a big fall on Monday. That's yesterday by about 60 pies from 85.23 to 85.83. And today morning, it seemed stable. We thought we would get away with the 10 pies fall. But late after lunch, there has been a huge fall. And now we are about 40 pies lower. So together, it's almost 1 rupee more expensive that the dollar has become. The news is not the rupee fall. The news is the reason why it fell. And that is the lower Chinese fixing. The official rate every afternoon, all central banks fix, even there is an RBI fixing of the rupee. The yuan has been fixed at its lowest level since September 2023. It's not by a huge lot. It used to be 7.19 to the dollar. Today it is 7.203 to the dollar. It's not a big deal, but it clearly shows an indication. And once the PBOC indicates that it is prepared for a depreciation of the currency, the official, the market rate fell even further. 7.30 to the dollar yesterday, today 7.33 and change to the dollar. So clearly the Chinese yuan is signaling that it is falling. And obviously the interpretation is that if you're going to punish me with tariffs, I will cheapen with currency and get around it. That seems to be the message that's coming. Usually when the yuan falls, all Asian currencies fall. And you can see that in the won, in the ringgit, in the Taiwanese dollar, Filipino. You can see it across the board. And likewise, you can see it in the rupee as well. There are a lot of traders, treasuries, bank treasuries, which play all currencies. So there are these currency players who have marked most of the Asian currencies, including ours, lower. And there is the usual dollar demand from importers, maybe even from some foreign funds. We don't know whether it will be a net positive number today. So there is some demand from FPIs as well. And importantly, the Reserve Bank is not supporting any level. So they are not there on the other side. The point to take home is that hereafter, don't look at the rupee only by looking at the dollar index. Also look at the yuan.
Absolutely. Tomorrow, all ready for RBI, Lata? What's the question to the governor?
25 is for sure. Yeah. The question now is whether it will be 50.
50 or not.
I mean, it could be. If you're anyway going to give 100 basis points in this entire cycle, why not give one together, 50 bips? But if it is only 25, it will be taken as hawkish. It should be 25 plus a stance change or something like that.
But I think that is also now in the price. A stance change also perhaps is more and more people are saying.
What is in the price is the liquidity. There's so much money in the interbank system that normally the call rate, the rate at which banks borrow from one another, would be the repo rate. Today it is about 5 bips lower. Because there's so much liquidity.
So just on liquidity, stance change is one. I mean, if they change to accommodative, right?
Yes.
If they do that. From neutral to accommodative. On liquidity, since they've given this big bazooka, 80,000 crores in April already, would the market want to hear anything more on liquidity, or is there more than enough sloshing in the system?
There is more than enough sloshing. And I think the Reserve Bank has made it very clear that they have detached liquidity management from policy. Policy is the price of the money. Amount of money is on a daily basis, the liquidity that the Reserve Bank sets, and it's 80,000 crore this month. So, Ravi, from January to March, it is 7 lakh crores.
Whoa.
So, I mean, they've really pushed in. The point they are making is, what Nigel, you were hinting at, they're pushing it even below the repo. The rate at which money is exchanging hands is even below the signaling rate of the Reserve Bank. And they may, we are sure to ask that question in the press conference, and we will hopefully expect an answer on similar lines.
Thanks very much, Lata, for that. So that's basically the sort of, tomorrow's agenda, which is, of course, going to be all RBI and what happens in that sense. By the way, today the EMS companies are all higher. And you look at some of these names, right? PG Electroplast is up 7, Kames is up 8%. And you've got a few others which are up 4-5%. I saw IIFL note which was talking about expectations for the fourth quarter. But this is, as Gautam Dugar earlier was saying, this is all, as numbers start to trickle in, it's all backward looking. It's always backward looking, but maybe now because of these tariffs, etc., it's a little more uncertain. So you want to hear, and I think most of the commentary and questions to management will all be about, what ahead. And how are they seeing the implications? Because if these tariffs stay, etc., direct and indirect as well. Gurmeet, always I kind of sort of try and ask you whether is there anything you're particularly liking. I noticed delivery is down big time, 6.5%. Is the number one volume-led loser right now across the board. There was that acquisition of Ecom Express, Gurgaon-based company, dependent hugely on e-commerce. But I'm not sure if there's anything, delivery or any other names, Gurmeet, which interest you.
Prashant, on EMS, I think it's just that the margin for error for any misses is not there. I mean, obviously the story is good long term. We have Dixon in our portfolio. We exited some bit of PG Electroplast and Amber. I did some routine profit booking. And right now we are assuming that we are less tariff. If some countries like Vietnam, Taiwan figure out a zero tariff, deal, something may happen, then all of this, so I think right now it's not the time to really second guess and think that, okay, we are less tariff, so we will gain and start buying 100p stock. You want to hold certain part of it, that's fine. On new age, I think Zomato, is something we probably added a little bit at around 200 levels. I think this quarter could be a bit rough in terms of the Blinkit being, because they've added more dark stores. And a lot of people say this is cash burn. To me, it is, it is actually capex. Adding dark stores is not cash burn in the long run. So I think that's one space we want to look at, both from a food delivery, both from an e-commerce as well as the district app, which is, the tourism economy, the ticketing economy, which is a much wider play.
Okay, so Zomato gets a thumbs up. Wondering if that's what you bought yesterday. What did you do yesterday? 10 seconds, you have to say goodbye, Gurmeet. Yesterday, what did you buy? There was a fire sale going on.
I just got L&T and Reliance, Surbhi. I'm just keeping
L&T and Reliance.
Now. Yeah, just keeping it simple for now. Buying things with no linkage with US.
Yeah. Okay, got it. So that's those are some ideas to work with. Zomato, L&T, Reliance, some of the recent positive bets for Complete Circle. Gurmeet, thanks very much. Always a pleasure having you on the show. Thank you for joining in. Need to take a quick break. On the other side, we get you a view from Kotak Mutual Fund. Shibani Sarkar-Kurian will join in with a perspective on the market.
Shibani Sarkar-Kurian is Head of Equity Research and Fund Manager at Kotak Mahindra AMC. Shibani, good to have you here. Prashant this side. So just your feedback, Shibani. I think that's all we can do after your, what's the feedback from your team? You have analysts, you have other fund managers. I'm sure you sort of put heads together to figure out how this is really going to play out. And what's the distilled view which is coming out from the Kotak house, Shibani?
Hi, Prashant, and good afternoon. So I think one clear view that is coming out is that uncertainty is possibly here to stay at this point in time. So it's very difficult to take a very clear-cut, idea or thought in terms of what pans out over the medium term or the near term, given the kind of situation that is ever evolving on a day-to-day basis. So in this sort of a context, there are a few key things to look at. One, when you look at markets and the way the global economy and growth is panning out, given the situation today and assuming that all things remain the way it is as of now, there is likely to be some impact on US GDP growth, and that has a second order impact on global demand. And India, to that extent, is not immune from an overall perspective. While there is a lot of thought that tariffs in India are lower than some of its other Asian counterparts, but again, we'll have to wait and see how bilateral discussions move between countries and what you were earlier also discussing in terms of what countries do on the currency front. So I think the best way to approach the market as of now is to essentially look at stocks bottom up. Look at companies which are more domestically oriented, sectors which derive demand from the domestic economy, including discretionary mass consumption, some of the banks, power, cement as segments, or even healthcare, which is essentially hospitals and domestic formulations business. We've always had the view for a while that from a valuation perspective, it is better to be in large caps as compared to mid and small caps, and that thought continues to be the case. But overall, I think we are looking at companies more bottom-up in nature, trying to look at companies where there is some visibility of earnings and where valuations are reasonable.
Okay. Shivani, hi, great to have you on. So let's just talk about whether overall there's a shift in the house view in terms of preferred sectors. You've always had a bias for, of course, the capex side of the market, cement, of course, early investors in PSUs as well. But given the shifting nature of the market, is there a change? Is there a churn that you've undertaken at Kotak, and what would the top bets be now?
So obviously with markets evolving and the situation evolving, there is some amount of change that takes place in terms of thought process as well. While structurally we continue to like the entire capex manufacturing theme, we have also been cognizant of valuations in the past. And therefore, that is one segment where we've, if you look at our disclosed portfolios, we would have reduced weight. Some of the sectors incrementally where we've, looked at positively, one has been the entire private sector banking pack, especially the large banks and some of the large public sector banks. Of course, the sector is not out of the doldrums as far as earnings, margins, lower loan growth is concerned. But our belief is that a lot of it is factored in terms of valuations. And therefore, that is one segment which we believe remains relatively insulated in this current environment. The second area has been discretionary consumption, especially mass discretionary consumption, areas like travel, tourism, retail, QSR, for instance, some parts of consumer durables, which essentially benefits because of the tax changes that have been announced in the budget and also because of interest rates coming down. So that's another segment that we've been positive on. Cement, we continue to remain positive on. We believe that volume growth has started to recover with some amount of government capex and spending coming back on track. And margins should hold up, given that there is lower cost pressures. And the overall thesis on cement of consolidation and market share shift continues to be the way forward. So these are some of the segments that we continue to like. And within the healthcare space, finally, I think hospitals has been a segment where we've believed that profitability improvement is continuing, though in pockets we are also cognizant of valuations, but overall within the healthcare space, hospitals is something that we continue to prefer.
Okay, hi Shivani, good afternoon and good to see you in. Well, one of the sectors of the day is actually the OMCs. In spite of that excise duty hike, which the government will be pocketing the 2 rupees, the gross marketing margins are still much higher than what we have seen in the last few years or what the street is working with for the next few years. And the kicker has come in because their LPG losses will come down as well. I see you all have HPCL, among the listed companies, IOC, BPCL and HPCL, it's part of your portfolio. You believe there's more to go from here, given that crude oil prices have come down drastically, valuations are fairly stable, and there is some room for the government, even if they hike duties, still there's room for them to make good money.
So absolutely, Nigel. And if you look at what's happening globally, one of the possible impacts is that oil prices, given that there is global GDP growth slowdown in the offing, assuming things stay the way they are, oil prices are likely to remain fairly muted and possibly in a range. In that sort of an environment, clearly some of the energy names and the OMCs benefit. As you rightly pointed out, these are companies which are trading at extremely attractive valuations. From a marketing margin perspective, margins are such that they will possibly offset the weakness that you will see on the refining front, as well as some of the inventory losses that you will also possibly see during the quarter. You are right that even with the announced excise duty hikes, the marketing margins at this point in time, where oil prices are, they are enough to offset the impact as well as provide better profitability in the near term. So yes, we do believe that this is one segment, given the way the global growth outlook and demand scenario is playing out, as well as way supply demand is panning out where oil is concerned. This is a segment which looks attractive from a relative valuation perspective.
Okay, all right. Looking more inward then, what about the discretionary consumption names? You've got a couple of those in there as well. And I mean, there's unlikely to be much impact of what Mr. Trump is going to say, at least no direct impact. You'll continue to bet on that?
Yes, Nigel. I think overall our portfolio strategy, as we were discussing earlier, is to look at pockets within the market which are more domestic facing, which derive demand from domestic sources. And within that, the discretionary consumption pack clearly fits the bill. What we believe is that the impact that you're seeing, or the positive impact, I might say, of the tax cuts is starting to flow through now, especially where the middle income segment is concerned, and that should play out as far as some of the mass segments are concerned. Now, overall, within the discretionary pack also, we are looking at companies where valuations are reasonable, where there is some amount of certainty or at least visibility on earnings. And therefore, segments such as, for example, travel, airlines, tourism, parts of retail, which is more mass in nature, parts of consumer durables, two-wheelers, for instance, which also derive benefit from the rural segment. These are names that we are looking at across the portfolios.
Okay, all right, got it. So to sum it up then, Shivani, what's the sense, what's the advice? It's anyone's guess as to when global markets stabilize, but over the next, say, quarter or two, are you expecting, I mean, is consolidation the best case scenario, or do you see the bull charge resuming anytime soon?
No, I think that at least we'll have to muddle through volatility and uncertainty in the near term till you start getting a sense in terms of how countries are, carrying out their discussions with the US and what's the final outcome. So near term, Surabhi, I think uncertainty stays. The best thing to do in this sort of an environment, even though while the medium term outlook on India seems to be fairly okay at the margin with, liquidity, as you were also discussing, improving GDP growth appearing to bottom out for India, as well as rural demand picking up. But I think in the near term, it is better to, one, stick with large caps over mid and small caps. Within the mid and small cap space, go extremely bottom up, be very stock selective, stay away from pockets of high valuation, look at companies where there is some degree of visibility on earnings and where valuations are reasonable. So I think that's how we are really approaching the market at this point in time. One thing is for sure that, we'll hear a lot more on tariffs. This is clearly not the end. So possibly over the next couple of weeks, months, there will be a lot of evolving parts and moving parts which will shape our markets going forward, as well as global markets.
Yeah.
All right, Shivani, we'll leave it there. A good conversation as always. Thanks very much for your time. Appreciate it. Well, the market has come off a little bit, 120, 130 points off the highs, basically from the 230 levels, and we're above 22,500 at this point in time. We'll take a quick commercial break here. As always, we get you what's happening in dealing rooms. D-Street Chatter with Nimesh comes up, and of course, some trading ideas with our technical experts as well. Stay tuned.
Welcome back. Take a look at Z. That stock is now up closer around 11% as we speak. Massive surge is what we have seen. I think at the start of an hour or so ago, it was up only around 5%, but now that's taken off. So big up move is what we're seeing out there. PVR Inox as well, that stock is now up closer to 5%. The stock is less than half of what it was at its peak, so that's pulling back some of its losses that we've seen. PVR Inox now up close to around 5%. But it's that time of the day when we tell you what's going on in D-Street chatter. Nimesh joins us to give us a pulse about what he's picked up. Nimesh, what is it? How are the flows?
Hi, Nigel. A decent pullback, and this is something which we spoke about, a possibility of a short covering rally yesterday as well, and that's exactly the way it's played out today. In terms of flows, it's not a great participation from large institutions, but I guess it's largely a short covering rally. So extremely oversold sectors like IT, pharma, metals, all have seen a bit of a pullback in today's market. From a flow perspective, there is a bit of buying in technology stocks and select private bank names. So that's overall feedback. But again, I guess the big trigger to watch will be what happens with the reciprocal tariffs. The deadline is on 9, so if there is anything, a change of stance, that could be a big trigger for all markets, and that for India as well. So maybe a further short covering rally is not ruled out. But in that case, I guess on the higher side, 23,800, 900 will act as a very strong resistance. So net a good pullback rally on short covering, but there is no big participation from larger institutions today.
Nimesh, what's in the chatter box today? What are you picking up?
Just a word on what Nigel spoke, highlighted about Z Entertainment. I guess there is some buying interest back from larger HNI, so that's the buzz there. I don't know whether there is some deal in the works, but that's the chatter that I picked up. Having said that, a couple of names which are part of my list today. First is IDFC First Bank. Big volumes on the last few days in that stock as well. The stock has been consolidating, but I understand a couple of HNI investors are active buyers. At the same time, today there is delivery-based selling from larger FIs in IDFC First Bank. So that's the first stock. Second stock is HPCL. We spoke about the announcement which came yesterday, but for HPCL there is buying, as well as there is a Morgan Stanley tactical buy as well on HPCL. Morgan Stanley believes that from here on you could see an upside in the OMCs, and HPCL is most levered in that sense. So that's the reason why HPCL is buzzing in trade today. The third stock is a couple of names where there is a delivery-based selling. Sun Pharma and Blue Star. Blue Star stands out because after a long time, I'm getting a sense of some bit of supply coming in from larger FIs in that name. So Sun Pharma and Blue Star on the sell side. And on the buying side, from a delivery-based buying point of view, Infosys and Wipro both stands out. I spoke about a brief buying in IT names, but these two specifically names are where there is a bit of institutional interest. So FIs have started buying selectively into technology names, and Infosys stands out in that.
Nimesh, anything you're hearing in delivery? The e-com company, I mean, there was their acquisition. I think the acquired company posted a loss. Is that it?
Yeah.
Yeah.
So Prashant, broadly, I guess the sell-side analyst seems to be quite positive with this deal. I guess the only outlier from the sell-side was an Equirus note. Nigel had put out as well on tweet. I mean, they seem to believe that it's negative in terms of acquisition. So that's the only negative that I heard of. But otherwise, I haven't heard anything negative, so to speak. I mean, broadly, most of the brokerages seems to be quite positive post the deal announcement.
Okay, all right, Nimesh, thanks a lot for that. Well, that's right. The lone brokerage, I think, that was negative on this deal was Equirus, and they have pointed out few points. One is they're saying that delivery just turned profitable. Now they're doing this acquisition, which will drive profitability yet again. Point number 2, they're talking about their key client, which is Miso, both for delivery as well as e-com express. And, Miso has been scaling up their in-house platform itself, which is known as Valmo. So because of that, the need for them obviously goes down a little bit. The other point they're talking about is the intensified competition, and, that's likely to weigh on all players out there. And finally, they say the merger could unlock longer-term synergies, but in the near term, it will be a bit of a drag. So though the initial reaction was, everyone's looking at the EV upon sales and the likes and saying got a very good deal because the acquired company itself, they got it at a fourth of what it was supposed to be at the IPO price.
Yeah.
But then they highlighted this, and to be fair, they highlighted this over the weekend itself. So initially the street has taken it positively. Today I think the street is reacting to that.
And it's selling off on a day when the market is bouncing.
Yeah.
So there is some... And by the way, as I said, it is the #1 volume-led loser on the NSE. So it's not going down in small volumes. It's large volumes as well. Well, Mitesh is with us now with what he wants you to do in terms of short-term trading ideas. Mitesh, what do you have?
So STBT on Siemens, I think that's one stock which is now slipped to the low of the day. Keep a stop above 2,800 here, 2,780 here, and look for a target of 2,730. And on the buying side of the Indus Tower, Prashant, I want to make a disclaimer that we have some call spreads over here. So we have a positive bias in our positions as well. But Indus Tower for me is a BTSC with the stop at 368 for 367.5 for targets of 376.
Okay, all right. Just one more point, guys. Thanks a lot for that, Mitesh. Just want to point out one more stock, Vijaya Diagnostic. The stock is now up close to around 12%. The total volume traded, I'm just looking at it, is close to around 1 crore, which means that close to around 10% of the float has got traded now. Now it's up 15%. Interesting to see whether or not there's some large trend of ads, but the percentage, the total traded volume divided by the total number of stock that is there, it's more than 10%. So I guess that could be something to report by the end of today.
Also, their Q4 update, I think they're talking about almost 14 to 15% growth in the fourth quarter. And that's something that the market has clearly liked. I mean, they're loaded with the order book, of course. And revenue visibility, at least in the fourth quarter, seems to be 14%. Well, let's talk about financials now. A couple of brokerage notes have come through on bank stocks. Abhishek is here with the latest. Abhishek?
Well, Goldman Sachs has upgraded some of the financial entities that they cover. One of them being PNB Housing. They have upgraded it to buy target price of 1,184 per share. They say that they have upgraded on improving visibility of delivering healthy loan growth along with robust profitability by the entity. With respect to Axis Bank, they have upgraded it to buy target prices 1,228 per share. They say that valuation mean reversion is seen as profitability and growth are nearing bottom in H1 FY26. So the company will be a beneficiary of the liquidity, infusion that is seen in the system, which should support its loan growth trajectory. For SBI, they have upgraded it to buy neutral from sell, target price being 823 per share. They say that the risk reward is now balanced given the fact that the stock has derated from 1.1 time price to book value on a 12-month forward to about 0.9 times price to book value on a 12-month forward. So this valuation seems fair for a 90 basis point ROA, that is return on asset, that it's generating. So CLSA has written on Bajaj Finance. They have an outperformance rating and a target price of 11,000 per share. They said that with asset quality headwind receding, they expect Bajaj Finance to regain its class from FY26. So investors' focus will shift away from net interest margin or asset quality towards a loan growth trajectory for the entity. So they say that even if ROA declines by about 50 basis points from the 4% level to 3.5% level over the next 5 years and AUM grows at 25%, they still see a PAT CAGR of anywhere between 22 to 23% over the next few years for Bajaj Finance. So no other large stock in their coverage, and probability overall in India offers such a healthy PAT growth over the next 3 to 5 years is what they have to say about Bajaj Finance. Back to you.
All right, Abhishek, thanks very much for that. So that's banking and financial services stocks in focus there. 350 points in the Nifty. We take a quick commercial. Okay, I think we have Jay Bala with us now to take us through what he's making of things. He's, of course, with cashthechaos.com. Jay, good to have you with us here. Thank you for your time. We speak once every week. I think we'll have to increase the frequency, because interaction to interaction, we see so much in terms of moves, big moves, that levels get taken out on both sides. What's the view now, Jay, from here on, near term?
Yeah, hi Prashant, good to be here. And I've said in the early part of May, when the markets were bouncing from 21,900 and change, I said that was a counter trend bounce. The counter trend bounce, I anticipated it to clock one more high about 23,860, but it failed to do that. But that's the thing with counter trend bounces; it can end abruptly. But we had markers, if the markets got rejected from 22,412 and printed 22,676. I said, the counter trend bounce has ended, but unfortunately, the markets capped on below the March low. So that wouldn't have provided opportunity for people to short. But right now, as the markets come back to that near about 22,600 odd levels, it's probably presenting another short-term shorting opportunities. But from a slightly higher time frame, if the markets were to hold on 21,608, it's an intraday print. It doesn't have to close or close below that level. If it can hold 21,608 or above, there is a bullish potential for the market for the medium term. But looking at how Reliance has broken down below March lows, Nifty metals index, Nifty auto index, Nifty IT index have broken down. I think that's a very low probability but just to keep in mind. But I had presented three choices for three.
Jay, allow us to come in. To a lot of data points over here, so just allow us to come in. You said that the zone of around 22,600 odd, it could present a decent shorting opportunity. With what sort of a target?
Yeah, I think either 21,608 holds, and so we're getting a new low below yesterday's low of 21,752. So 21,608, if it holds, it's bullish. But if it doesn't hold, the March price objective that mentioned 17,800, that opens up. So the higher time frame objective of 17,800, I'm still not opening it up, but it's definitely a potential if 21,608 breaks even on an intraday basis. So right now I'm watching it very closely.
21,600, that's still a very decent 1,000-point short play if it works out, because you're saying short around 22,600, wait for it to see what it does around 21,600. So that's almost a 1,000-point range. Any other individual, stock specific?
When does a short call get nullified? At what level?
Oh, good point.
Yeah, it's if 23,350 were to get taken out, that gets nullified. I think today's high is already probably it's done the corrective move. Probably it's starting to decline from today's high. Probably I don't think it's going to give another opportunity to get the markets to 22,600. Yeah, so that's the case here.
Okay, all right. If I have to guess, Jay, based on what Mr. Trump has to say, maybe by our next interaction, we'll either be at the upper end or the lower end of what you gave us, 23,350 or 21,650. Let's see how that goes. I want to hear more from you, Jay, but for the time being, we'll take that break, come back. We'll probe Jay a little bit more into what he's looking at in terms of levels on various indices. Don't go anywhere. Welcome back. Well, a couple of stocks that have really spiked up. Z, we were highlighting this. That's gone to the high point of the day, up 13%. And Sun TV as well, another underperformer actually, though valuations are attractive. That stock as well has spiked now to the high point of the day. So keep an eye out on both those two. And Vijaya Diagnostics that we were talking about, it was up close to 11-12%. I think now it's up 15%. So big volumes out there. But Jay is still with us. Jay, what about the tech index? It's pulled back, but you are seeing further downside even from here?
That's right, Nigel. The damage has been done in the medium-term charts, and there is as we have mentioned in November about the US techs possibility of clocking a long-term top. The IT index of India seems to be moving in tandem with the US tech, big techs. So, in the very short term, we could see a shallow bounce to something like 39,000, maybe even close to 40,000. I mentioned this last week, but the break of March low is very negative for the Nifty IT index. In a few months, I'm anticipating the Nifty IT index to clock something like 26,000, not a short-term move, but it's possibly post 39,000 bounce. But in the medium term, if the US techs have indeed, which it looks like, have clocked a long-term top, the Nifty IT index is also likely to go low. On a lighter note, Nigel, you mentioned Trump last time. No, there's a way to solve issues. Apparently, if you say thank you to Trump, you can probably even stop the portfolio from bleeding.
But I'm more worried about this tech index you're talking about. After such a sharp fall, you're talking about another 20% downside. Jay, I'm waiting for you, to turn bullish. Anyway, Jay, but you got a couple of stock calls for us. Tell us more.
Yeah, it's on the Tata Group. Two stocks from the Tata Group, one on each side, on the bullish side and the bearish side. Tata Consumer, I'm watching it for bearish potential. It needs to do one more high above 1100 and then drop back below 1045. It has to do both these steps. Before that, it's not bearish. And if it were to exceed 1100 without a rejection from 1129 to 1130, then this is an invalid setup. So wait for the stock to clock higher high to 1129 and then get rejected. Then it turns bearish. The bullish call from the Tata Group is on Voltas, probably something to do with the summer. And the stock has moved from the February lows in a 5-step move. Usually 5-step move is a trending move. If the stock can manage to hold about 1182, there is a short-term bullish potential. It's not an investment call, a very short-term bullish potential. So it's a straight call, unlike Tata Consumer.
Very quickly, what about some commodities? Crude oil, we are celebrating it fall. You don't have to fall a lot more actually. That would mean that we're going to get into a big recession globally. But from here, from 65, where does it go? And also, if you could give us the level on the dollar index.
Yeah, right now, crude has one more lower lows to come through. It threw a curveball last week, and I mentioned in March that it needs to clock one more lower low. But when it crossed 72, it just gave us a little bit of curveball, and it's come back to lower lows. I think one more lows is due for Brent around 55 mark, and after that, it's up for evaluation. When the dollar index is probably heading somewhere close to 100. If it were to break 100, I'll anticipate somewhere like 97 to 96. Again, given the extreme volatility in the commodities and the FX market, I'll have a wait and watch. And we anticipated, the dollar index to give up most of its gain to somewhere about 103, but it's far exceeded that level. So it's more of a wait and watch for the short to medium term. And one more commodity, copper. Copper has probably seen a buying climax. And copper is actually quite late. It gets a doctorate degree because of its ability to catch the bottom, not the top. It's been the case when 2008, 2000, and 2020.
All right. Jay, we'll chat more in markets forward. Coming back to you in a bit. Let me just quickly wrap out things. So we'll end about 380 points higher on the Nifty. So 22,550. So very decent bounce. But of course, we saw world markets also posting a decent session here in Asia, and I think in Europe as well. Even US futures, I think, are continuing a little bit of stability that we saw last night. So that is that. To be sure, I mean, there are no headlines out there except that fake one last night. There are no tariff headlines which suggest that there is a relief of any sort. This is just markets doing their thing after what basically was 2 days of very large selling comparable to some big historical events. So that's what we are seeing. So this is a market which still remains hostage to headlines and news flow, etc., as and when it comes through. So those are indices, those are changes. I think the mid and the small cap indices also end about 2% higher, it's a decent looking session all told for markets. The big gainers on the Nifty are Jio Financial Services, Shriram Finance, Bharat Electronics, Cipla, Eicher, Grasim, and Titan, which really stood out. And of course, very few. Actually, one or two losers, that's it. So not bothering with that. And of course, I mean, gainers are Vijaya Bank, 5-Star, Keynes and PG Electroplast. Something like a Chola Holdings was a big winner, OneSource, Sequent Scientific. On the downside, two names, Delivery, huge volumes, and there was IGL, of course, on the back of that Delhi news flow, which was down sharply, some 7.5%. Or so. I think it's a wrap on this edition of Closing Bell. Thank you for your time. Thanks for staying with us, but don't go anywhere. Markets forward. We'll pick up on all the action in just a bit.